Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're going to talk a little bit about the housing prices, mortgage rates, because I just closed on a house this week, so it's gotten a little bit interesting in terms of what's been on my mind and what could happen this year with the Federal Reserve rate hikes and where the housing prices are going to go.
All right, if you like this kind of entertaining stock market content where it's two stupid guys trying to trade stocks and apparently real estate, give us a like and subscribe. Two Stupid Guys Trade Stocks.
Hey,
Congrats,
do
man.
you recognize this background? Oh, thank you very much. Do you recognize this picture I used for a background here?
Uh, Wait, oh, this is in the Big Short where they're walking around and there's like everyone has a for sale sign.
Yeah, exactly. The
Got it.
whole neighborhood
Okay.
is just like vacant. Like it could be shades of things to come. I don't know. Honestly, who the hell knows? But like this is the reason why I want to do this video is, I was kind of fortunate. Close this week. I had started the process about I would say 6 weeks before then. Unfortunately, things took a little bit longer to kind of clear up some title issues, but I ended up locking in a rate of 3.875%. And at closing, I was talking to the closing attorney, and he was like, "Yeah, he's like, I'm not seeing any threes anymore. Everything I'm seeing now is like 4.4, 4.5%, and it's actually even getting worse." This chart right here, by the day, it's literally getting worse. You've seen a APR go up about 0.5% in the last week.
So I will say this stuff does change faster than people think. Because, for instance,
Mhm.
when I closed on my house in November, I closed in the worst 2 week period in a full year, and unfortunately, I had to lock in my rate. But I had to lock in. Actually, I had to pay $1,000 for a point, but I had to lock in at 3.6, and then a
Okay.
week later, it was 3.15.
Oh, interesting.
Great. But you
Yeah.
either lock in or you risk going to four. So I'm like, oh crap. All right.
Yeah, exactly. I mean, I ended up paying basically it was an eighth of a point, not because of the points, but because we had to extend the rate lock twice. But it was worth it to me because that would have been a significant amount of money over the life of the loan if I had let the rate adjust because it would have been more than a 0.5% higher by that point.
Mine was I had to lock in 3 days after Jerome Powell spoke.
J Pow. In context of things, we've seen much higher mortgage rates. We're still like relatively low, even if you go with the 5% number. That's a number where you haven't seen it for decades, basically before then. That
Yeah.
is a modern invention of mortgage rates below 5%.
Yeah.
Right?
It's wild. Borrowing money for 2%, or like everyone freaks out when they got like 2.85 instead of 3.5. That's stupid cheap. You're borrowing like $400,000 on 3% interest. Like, it's fine. You're good.
Yeah. Yeah, I completely agree. The driver behind this is that not only do we see the first rate hike in the Fed funds rate, that 0.25%, but when we're seeing like the voting data, basically they're calling for like 6 rate hikes this year. Meaning it, now the dispersion amongst like the different Fed governors was pretty wide. I want to say I think the lowest one was calling for a Fed funds rate of about 1.5% at the end of the year. The highest one was calling for over 3%. So it's a pretty wide dispersion there, right?
Yeah, I think it's, the Ukraine and Russia invasion of Ukraine has definitely thrown a wrench into their initial plans. Because we were supposed to go up a full half point, we went up a quarter point. So,
Yeah, exactly. Yeah, they're calling for 2 half points now, basically, with the next two meetings. And as a result, you've seen a lot of these kind of home related stocks selling off, right? This is the home builders index, the KBH, I think no, not KBH. KBH is one of the companies. I forget the ticker symbol. XHB is the ticker symbol for this. Pretty nice downtrend there going right now, right?
yeah.
And if you actually move me, you'll see the stochastics are still, in an area where it looks like it's going down for a period of time, right?
Oh, you're a stochastics guy?
I don't know. I'm still experimenting with a lot of fundamental stuff, so
I like them.
that's something I looked at. This was one you actually asked me about, Home Depot. Look at that chart, huh?
Yeah, we stay tuned. I do take a look at that. We looked at a series of stocks and which one is beaten and bad enough to buy. I
Yeah.
actually think this needs farther to fall after looking at it.
Yeah, interesting. I ran some basic like discounted cash flow stuff on it, and it would have to be in the low 200s before I would be willing to take a bite. Because a lot of this has been driven by home refinances, which are really sensitive to interest rates. As much as mortgages are dropping, refinances are dropping even more. Cash out refi to do some construction. The other thing that you're seeing is they've had blockbuster kind of growth over the last couple of years, and that's going to be tough to continue to perpetuate that. And also they've had some of their profit margins narrow. I think they were historically about a 10% net profit margin, and they were only 8% last year because they're seeing a lot of inflation in terms of like the cost of the goods that they're acquiring.
Yeah, it was on my list because the chart looks like, all right, this is ready to come back. And then I looked at just a couple of fundamentals, not a lot. I didn't like that they were actually they had like negative growth projections because 2020 was insane. I'm like, oh man, they didn't make
Yeah,
it. Didn't make the cut.
I did that pretty conservative. I did a 10-year analysis with 4, 6, and 8% in terms of annual growth revenue growth.
You got low 200s.
Yeah, low 200s basically is where I'm starting to get interested in it.
I was like mid 250ish.
Okay, so a couple stats in the U.S. housing market here. So we're talking about median household income, 67K. This is from 2020. Unfortunately, I couldn't find anything a little bit more recent than that had a good reliable source on it. But this is from Federal Reserve. Median house home price and the end of 2020 was 359,000. Right, that went to 408,000 for the end of 2021. That's the most recent quarter. Yeah,
that's a lot.
Yeah, pretty crazy, right? 13.6% increase in 1 year.
It's better than the SPY.
Actually, I know, right?
I don't think it was.
No, 2021 was not. Yeah, but better than the SPY historical average. Okay, and this right here is actually from I forget the name of the website, but it was like basically it's a mortgage news website, and like I was saying, you're actually seeing the rates starting to touch 5% even. This is the daily rates, right? So March 18th, 4.46%. March 25th, 7 days later, 4.95%.
7 days?
Crazy, 7 days, 0.5%.
Yeah, that's gross. That's that's a lot.
Yeah, this is got that. It's starting to head towards like a parabolic shape here. Pretty crazy. I threw the numbers basically in terms of the median house price and then looked at what like payments would be depending on these different interest rates. And you're looking at, when you were the 2020 median house price of, 359,000 at 3% interest rate, it's a $1,500 a month payment. Now, if we swing all the way up to now, current market, where we're talking about 5% interest rate, and the average home price was up to 408,000, which is probably even a little bit higher now, you're talking about $2,200. Big swing,
I mean, usually when you're looking at interest rates difference in like payments, it's always like a quarter point. This is $500.
Yeah,
I mean,
it's more than 500. You're talking about well, if you're looking for the same home price, yeah, about $500. But yeah, pretty crazy. And that's this is 100% financed. This is not including any down payment or anything like that. But yeah, pretty insane. You're going to start getting a smaller and smaller pool of buyers that are able to afford that. Especially when you think about the median household income being $67,000. And I looked at Zillow's projection actually, and they're calling basically for the whole market to peak in about May. That's when they think this is going to be the penultimate point of this wave, which seems reasonable, right? You're talking about
May is this year. 1 month, May?
Yeah. Well, like a month and a half.
Can we trust Zillow, though? Because they drastically messed up.
Yeah. Like, is this the same AI algorithm that was buying homes and selling them for a loss? Could be. It really could be. Who the hell knows? But I think the timing is kind of interesting. From everything I've been reading is that the home prices kind of peak about 6 months or so after you start seeing the rates creeping up, which, the rates really, last time they were 3% was beginning of December. So that lines up pretty well with, the historical patterns of about 6 month lag there. Because as the rates start going up, you start getting people flooding in the market a little bit. This is a little bit of an interesting example, but in the movie Titanic, when all the rats are kind of running towards the part of the ship that's going uphill, that's kind of what I picture.
That's a solid metaphor, Vinny.
Yeah, exactly. But that's what you're seeing right now, and then that's gonna kind of blow off the top a little bit. You're gonna see home prices go up, and then May, June, as we start going towards the summer, that's when they'll start to come back down to reality a little bit. It's kind of the thought process, at least.
You're
I don't
also
know.
going
What
to
do you think?
see, I would assume, less investment home buying because it's just an opinion. It's great when your interest rate's 3%. You're borrowing a bunch of money for 3%. You're easily going to get that back in rent. But now when it starts going up, your margins get a lot smaller on rent collected and payment.
That's definitely part of the story. Still, 75% of homes are bought with a mortgage. All right, so people using these hard money, cash loans to buy investment property or buying cash, quote unquote, that still only represents about 25% of the market. And the other thing that, when you buy this investment property, what are you doing? You're renting it out, right? So it really depends on the burden that renters can support as well. And rent prices have basically followed home prices here, so there's no
They have. It's awesome.
expectation that they would be able to separate in a drastic fashion, at least in my mind.
Rent prices have gone up so high that I scrapped my Airbnb plans and I'm just doing rent
Interesting.
because
Yeah, whatever
I'm
works.
making 100%. So
Sanity.
the mortgage is 12 and the rent's 24. So I'm like, the unstable market of Airbnb just doesn't quite make sense right now until something changes.
Yeah. It's interesting and definitely yeah, cool. We could do a separate video maybe on like the finances of that. Like I'd be interested to see. Hopefully we'll see a housing crisis and then maybe I can pick up a rental property as well.
Rental property. All right,
Yeah.
guys, let us know if you're buying houses, not buying houses, renting, all that good stuff.
Or shorting the home builders.
Or shorting home builders. That'd be ballsy. Have a good one,
It would
guys.
be. See you guys.